We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up BILL stock. We are on a monthly time frame. Price action, last candle to the right hand side is a bearish red candle, more like a doji, long wick up to the top, so it can be pushing down further. So also is in the midpoint of an overall area. So there's a lot going on. So let's talk about it. Price action overall, higher highs. Price action overall, lower lows. Midpoint. Also adding second level lows. So zooming in the price. So current price is sitting at 122.53. And if price work its way up from this area, it can head back up to the high of that resistance will be at 157.56. Before making it there, it can head up to that second level highs of that area, which would be at 137.96. And if price work its way down, it can head down to the support of 92.64, but before making it there, it can tag that area, which will be at the bottom of that price action wick, near the bottom of that price action wick of 111.22. So we can see price hanging out in that mid-range of that area. So if market pushes down further, okay, so it's coming down from a pattern here that pushed that market down. So it's a lot of patterns inside patterns, so we're going to break this down. Market ran into a resistance here, so identified as the first, second, third, fourth. So we have a double top. Market came back to retest, one push. Market came back to retest after it broke that SR line and trying to push down for a second time. Okay, but price action is a doji, which is in the midpoint of not just that overall structure, okay, but is also in that midpoint of that area of price action high, price action low, and a midpoint in that area. So it's hanging around in there. So as it being a doji, market can be doing a few things. Now it can be just forming a doji for a retest for more momentum to push down further, or it can consolidate sideways, or we can see that market turn around and work its way up for that first leg, second leg, third leg, tag that support with that price action leg, and then work its way up with the following candle for the bullish green candle that reached that incline double bottom, and then we'll see that break, a retest, and the markets work its way up. Walking down to the weekly time frame. So a price action on the weekly time frame, bearish red candle, long wick down to that bottom, showing that that market lost a lot of momentum. Okay, so that market can be reversing, but we got to be careful because price action is still in the mid-range of that zone, of that price action resistance and support. So we know it's just hanging around there. So we don't know if it's going to turn around fully and work its way back up, or it's just creating more momentum for another candle. Why? Because we do know that, let's talk about it, got a resistance here. So market tagged that first, second, third, fourth. We have a double top. That second last candle came back to retest, and then price action pushed down and tagged that support, but still hanging at that midpoint. So this creates that doji on the higher time frames, that second last candle wick to the resistance side, and that price action wick to that support side. So when we head back to the monthly time frame, you will see that is a doji, and we can see the market went back to that midpoint area. Okay, so we have to let that market do what it do to see what's going to happen, but we're going to keep on walking down the time frame to see what's really going on. Price action on the daily time frame is identifying a bullish green, still a doji, so it's another doji in the market, so it's a doji behind a doji, but it's showing that that market pushed down and just worked its way back up to that area, that midpoint. So We don't know if it's going to fully go up because we do know that's in the midpoint. But the thing about it is what we're looking for is we are looking for that price action candle to engulf that second, at least that second last candle, but for sure that third to last candle close out to really push that market up. But so far that market could just be reading as a break, a retest, and it still can push down further or may just consolidate. But if it's going to work its way up, you want to see price action engulf that third to last candle body, at least that body to work its way up. On the 4-hour time frame, price action bearish red candle, so it's still within that consolidation. Price second, third, fourth, fifth, sixth to last candle, more of the wick is still in the area of consolidation. So if something happening here, we can see that market tag the area of support here and then came back for another tag, which can create that reversal, but we can see market is still working its way down. So what's happening is that market broke, pushed up, came back down, pushed up, came back down, and then pushed up again, but landed right back at the midpoint. So it's just a whole bunch of consolidation until we see that breakout. So let's find some areas to see that confirmation for that full breakout. Market's going as high as a price second, third, fourth, fifth, sixth to last candle wick, and to at least that second last candle body to see what that market is going to do. And you can see it's hanging around that mid-range of that zone that we just created on the 4-hour time frame. 3-hour time frame, same as well. We're going to put a SR line through the midpoint of that zone so you guys can see that market just hanging around that midpoint until we really see that pattern. So we don't know what's going to be respected at these supports to work its way back up. Okay, so if so, it will be reading as a pattern. We'll talk about that on a 1-hour time frame if it looks clear. Yeah, so it looked like a first, second, third, fourth retest, and market pressing out of that. 3 pushes down to that bottom, a triple bottom retest, and still respects and works its way up unless we see that market engulfs. But price action just hanging around that zone or that midpoint, same as the 45-minute time frame, same as the 30-minute time frame. Market just bounced up and down. So what we'll do is we'll pay attention to that middle of that zone for a pattern to identify the breakout. So a pattern can form and break out. We'll talk about down the 15-minute time frame and which patterns that can be happening. So this market's going to be respected for that support. We'll see that market broke, came back to retest, which will be identified as a first, second, third, fourth retest. And if it's respected for the support and the market works its way up, we'll see that triple bottom or double bottom and retest it comes out of. If not, market's working its way from a double top and a retest. But from the top side, we'll talk about it on a 5-minute time frame. On the top side, it'll identify as multiple pushes to that top. So overall, first leg, second leg, third leg, fourth leg, retest, and the market breaks down, coming from like a head and shoulders pattern, a double top and a retest. Working our way to a 3-minute time frame. Same as well, so price action is still back in that mid-range of that zone. So we're waiting for that pattern to break out this area and see if it's going to head down to that SR line that we did create an earlier time frame to break down first, just turn around and work its way up. So we don't know if it's going to respect here and work its way up for a pattern, or it's going to push down, but this market has to do what it do to form. So we can see that market's trying to do it first, second, third, fourth retest. Now if it's respected, you'll see that turnaround. Markets works way up if you guys on this lower time frame. Okay guys, very important information. Please study, review Forex pattern cheat sheet, breakout retest strategy. Click on images. Okay guys, this is Cam Jones, FX Daily Analysis. Thank you for watching and thank you for your attention. BILL Stock.